Hello everybody and welcome back to another central bank FX setup. My name is still Damir Galic from good old Germany, and I want to give you even a setup for into next week before FOMC meeting. In 1 week. And so here we are. Here we go. Let's get started with the US dollar future. The US dollar future signals me a very interesting point. Look at this, guys. All setups before I would delete, cause here we see we've got here after the house market recovery here, day after Schiller price index came out, we've got here this lower prices as I also accepted here into until to or only to the not so fast, honestly, here to this upside trend even from January, even upside trend of this year. And we broke last week here, and we break down here also of the high from October. And today we are trading here under the 200 SMA here in a red area. Lows, today's lows 80.70, 80.75, 74. We are trading right here, right now. So all in all, delete this setup for the dollar. I created here a new one. So I choose here a bigger picture, and the interesting point is following stuff. Look at this. Here, we've got here this upside trend channel, if you want here, lows 2011, lows 2012, here created here this channel. So, and even here high 2012 and high 2013. And we created here, if you want here, something like a WV formation. Usually this formation is a good setup for higher prices, but here we've got here this surprised downside trend, even the last 2-3 weeks. So I thought here maybe we could catch here the euro, the dollar future at lower price levels, but it breaks down here, and too sharp, honestly, here to buy. Could be a great recovery setup, as I said, even cause here we've got here this W formation. So here, and from this point of view, it's looking very attractive here to buy if you want the US dollar future. But I wouldn't buy yet at 80.77. So, cause here prices, I would wait here as the W formation started by 81.17 here, and we're trading here down under. So I would be pretty neutral here in this area, or prefer the short side. So, but if the US dollar future recovered or came back above 81.41 here, as we created here this W formation here, the highs of in September last year here. So before we break this year above, so at 81.41, then we could have a great great long entry, yes. But we are trading here right now under this W formation. So that means from a technical point of view here that this formation, this trend reversal formation, in my opinion, in my conclusions, don't work. So only if we get above 81.41, then I would be a bull again in the dollar future. So, and even in the cross rates. So, and if we are watching, for example, the euro US dollar, we're trading right here right now 1.3348, and euro dollar US euro dollar setup I uploaded yesterday it's looking very attractive. So from a technical point of view, so fundamental and politically influences euro, I wouldn't trade, but maybe I'm too pessimistic, and yes, and I wouldn't fight the trend. So the trend today in the euro dollar, and I will see, or to be an, or let me explain in one word or one set. Prices above 81.41, I would prefer the long side in the US dollar future. Prices down under 81.17, here slightly the short side in the dollar future. And into next week, this video setup, we have also next week central bank meeting, and the interesting stuff is following. Look at this. If we put here together paint here inside, last year I don't find here this high coloration like this year. Here we've got in January, 30 January, here the first meeting of this year. 2 days later we've got the low, and then we came back here in this upside channel. Here we've got here 2 days before. Here we came back. We came back here into the second meeting of this year, 20th March. So, and 1-2 weeks later we fall back. And the interesting stuff is here. Look at this, guys. 1st May 2013, last central FOMC meeting, we created inside this upside trend channel. Once again here was it once again an good entry, good setup, long setup. So, and the question, or which I ask myself here this week, is even here, will we get here even will the W formation technically work even with support of the OMC, or will the FOMC, will Mr. Bernanke saying something about stimulus, bond buying programs, QE, will this support or how the market will react? Will the market buy it as a support for the dollar or not? And however, I would, or all in all, not however, all in all, I would prefer next week then to buy the dollar back again, only prices above 81.41. So prices under 81.17. I would I would slightly prefer the short side. I'm not I don't have the courage yet to sell the dollar from this side. Cause we can put here, we can put into this picture, large picture, once set up again. So here once again, maybe here, here's template, once again here the upside trend for all bulls, lows 2011, lows 2012 here, and then here this is extended right bull channel. But here for all dollar bears, here we've got the highs 2010 and the highs 2012. So here, and if we paint here an extended line, even highs 2010, 2012, extended right line here, park, we see here maybe here this fight in this channel. So maybe the bears, all dollar bears here, sell the dollar throughout this years on a midterm here, first, second here, or in the third, March, April and May. So here, and we break here down. So this could be after map if you're on dollar bear. So here could be a good entry for all dollar bears after map. So, but I would wait into, even this setup is into the next week, end of next week. I will wait and see what will the Fed say and much more how the market will react, and then we will have hopefully a better setup. But I'm very, how to say, tight, not slightly. I would slightly prefer to sell the US dollar, but prices above 81.41 would be also a great setup for to buy the US dollar again. Cause if we break here this upside or downside trend from high 2010 and 2012, even with lows 2011 and 2012 here, and if we get here support, or let me explain another way, if Mr. Bernanke don't disappears the dollar bulls, or if he don't give me a reason to sell the dollar again, so maybe we could here, all bulls could have here a good re-entry. So, but I don't know, or we all don't know, of course, what will happen next week on the FOMC meeting. So yeah, let's wait or trade into it. However, all in all, once again, at the end, prices above 81.41, I would prefer the long side. Under prices under 81.17, slightly the short side. But we see here in the last days here, this trend broke massive, but that could be today here, this red candle under the 200 line could be for all bears also a great entry short signal here in the dollar. But I'm not I'm afraid to sell the US dollar into the FOMC meeting, cause here we've got here in the last 2 weeks simply too sharp downside trend. But if the downside trend should continue like in the last trading days, inclusive Wednesday last week, we could fall here into the lows of this W formation at 70.80.96. So yeah, and then we are in a and that could be good. And if we should fall here down, then we've got the evidence here for this good entry setup for the dollar bears. However, we will see what will happen. And yes, that's all for all from my side for today about the US dollar into FOMC meeting next week. Once again, we are trading at 80.77 on Wednesday, 12th June. On Wednesday at 12 o'clock 43 New York time, or even 18 o'clock 43 Central European time at 80.79. Prices under 81.70, I would prefer to sell the dollar, and prices above 81.41, I would proudly buy the dollar. Okay, that's all for today. And thanks for spending your time watching my video. I will talk to you tomorrow while Wall Street session. So stay well, take care, and have a good morning, day or night, wherever and whenever you're watching my central bank FX setups. Bye bye, guys. I'm over and out for today.